Joining us right now is two-time Nobel Prize-winning economist Joseph Stiglitz. He's the author of The Road to Freedom, Economics, and the Good Society, and the new paperback edition is out next week, and we're thrilled to have you back on the broadcast and eating a donut, no less.
And wondering about inelasticity, if you can, $50 for a dozen donuts,
right.
Maybe. So that's.
So we were just having a conversation with Joe Livornia about the economy, and I'm curious, just from your perspective, how you see it. Where are we?
Not great right now, and the prospects are that it's going to get worse.
Okay, so you are on the other side of where Joe is right now. Explain yourself.
Livornia.
Yeah.
Yes.
Okay. And Joe. He's on the other side of Joe and Joe.
Okay. So there are a couple parts. You know, the mystery for a lot of people is how come the tariffs didn't have the big effect on inflation? Economists always begin by asking the counterfactual. What would inflation have been but for the tariffs? Mm-hmm. And you remember the war in Ukraine going on and the pandemic, a big spike in inflation, and then it was coming down pretty rapidly. Mm-hmm. And before Trump arrived, the anticipation was that it was going to continue to go down pretty rapidly. It continued to go down, but very, very slowly. So the question is, what is the difference from what it would have been and what we experienced? And you look at those numbers,
right,
and it's about $1,000 for every American family. And those numbers line up very closely with the Federal Reserve numbers that Kevin Hassett criticized on your program. Mm-hmm. So, you know, the way I look at it, you put together lots of different pieces of data together, and they give you a picture. You know, if Hassett were right, we'd have to rewrite all the economics books. Good, you know, for our job, but the fact is, prices are affected by costs. There's no way you can get around that basic law of economics. Doesn't necessarily happen immediately, but it happens.
So if it wasn't regressive, would you have a problem with higher costs for U.S. corporations, like a tax, higher costs for high-end consumers, like a tax, raise so much in tariff revenue that the deficit is going to be lower than it would have because of that?
Would have been, but the big, beautiful bill raise the deficit,
but
and
it's going to be
tariffs.
less bad because of. So is it okay to raise money this way? People like the tax companies. They
No,
like to
no,
because it's regressive.
Because it's regressive and it's distortive.
But it might be distorting. The distortions that we've had over the past 40 years in global trade, we might be reversing some of this, or might be a reason to do it. No.
Yeah, no. He articulated a set of reasons, but he didn't think about the way the economy actually operates. Let me give you two examples.
Okay.
So the whole idea was to bring back manufacturing jobs to the United States.
Right.
You know what's happened to jobs in manufacturing in the last year?
They're down.
They're down.
They're down.
They're down. Did he succeed?
Might be a lag. Might be a lag,
but they're down. So very clear he didn't succeed over the last year in bringing back manufacturing jobs. Look at the deficit. Deficit, as economists look at it, multilateral deficit in trade in goods and services. We're a service sector economy, you know.
Right.
Goods are just less than 10% of GDP. You look at that, that's up.
Right, but that's the argument that the low-end people that are affected by the tariffs are mostly goods, and the high-end people that do all the consuming, mostly through services, can afford to pay a little bit more if you call tariffs a tax.
Yeah, so one part of it is if you look at who is paying these tariffs, it is lower-end people in terms of percentage of their incomes.
In terms of
it's regressive. That's why we say it's regressive.
I know. I had people lecturing me like I don't understand it, but yes, I understand.
So that's why it's a bad regressive. And you might say if there was some economic benefit, like on the other end, we're creating low-end jobs.
That's what Hassett says.
We would weigh that in.
Yeah.
But I mentioned the very large decline in manufacturing jobs, the decline in blue-collar jobs is even larger. And you look at where is the increase in jobs in the United States? Right. Healthcare. Does that have anything to do with the tariffs? No.
No, it has to do with people like us.
Getting old. Yeah, I mean.
Well, actually, he's the guy that has a birthday.
I have a birthday today.
Getting old. So.
Yeah.
So when you.
So the point is there's a mismatch between what they say they've done these policies, right. These are the results, and you look at the data, it just doesn't.
Do you think there's ever been, I'm actually curious whether in the econ circles you live in, whether there's ever been such a delta in terms of the debate about what the results say?
Well, actually, among the economics profession, there's not that much right. dispute. What is striking is, I was chairman of the Council of Economic Advisors. We had disputes with people from the Council of Economic Advisors mm-hmm. in previous administration. But we had enormous respect for each other. Marty Feldstein at Harvard, Mike Boskin at Stanford, Glenn Hubbard right. at Columbia. Mm-hmm. There was a sense that we might disagree on the numbers, but we respected each other.
Right.
That's not true of the Trump CEA. I mean, he squandered institutional credibility in the same way that I think Trump has undermined the institutional credibility of the Fed.
Well, let me ask you. So Kevin Warsh is going to be the new Fed chairman, assuming his nomination is approved. What is your take on Kevin Warsh and what he is going to do, what he's going to be able to do?
Well, anybody who gets appointed by Trump has to bend at the knee before Trump.
Do you have to? I mean, that's the other question.
Before you get in.
Yes.
Now, you don't know what will happen. What you do know is if you contradict what Trump wants, you will be criticized, even if Trump appoints you. So being appointed by Trump doesn't insulate you from pressure.
Right.
What has most disturbed me is some of his, what I would say, fanciful statements that AI increases in productivity are going to allow a significant lowering of interest rates. There are uncertainties about the pace of AI. I don't think there's any significant body of thought that think that AI productivity increases are going to percolate into the macroeconomy right. fast enough to justify any significant, with any impact on rate right. increases. And the fact that he said that, to me, was very worrisome.
We're up against a hard break. I want to thank you, Joseph Stiglitz, for coming in. The book is called The Road to Freedom, Economics, and the Good Society.